Do you have any prediction for 2024 on Bitcoin price that you want to share with us?
When we look at Bitcoin's previous cycles, it's never broken the all-time high before the halving. So this is very atypical. We don't normally see that happen. I do think that it would be weird if Bitcoin wasn't above 100,000 by the end of the year. That seems very doable and very plausible. It feels like between 100 and 150,000 by the end of the year is like a good target.
I was reading some discussion about really Ordinals or maybe NFT on Bitcoin doesn't need to have an utility. What do you think? A new era of development within the Bitcoin ecosystem is upon us. We have seen it with Ordinals, BR20, and now with Runes. But there is much more going on with DeFi. Dan Eld will join me for this episode to tell us more and what promise Bitcoin holds in the world of decentralized finance. Dan Eld, a serial crypto entrepreneur, Bitcoin educator with over 850,000 followers on social media. He is the former head of marketing at Kraken and Uber, and is an advisor to different Bitcoin projects, including Taproot Wizard, and finally is a GP, general partner at Asymmetric, where he's focusing on investing in Bitcoin DeFi. But before we get into the show, I want to ask you a favor. If you are watching our videos but you are not yet part of our community, click the subscribe button on YouTube and also follow us on Spotify and Apple Podcast and on our social media, not only to stay up to date with our news and interviews, but also to engage with our content. Tell us what you think and give us some feedback, which is really appreciated. And last things, remember that all the content on the podcast is not financial advice. Only information, and even if we share our opinion, which I do sometimes and my guest does, you should never act at the back of that, but you need to do your own research, skill up, get your information yourself. There is so much out there, so many communities, lots of content on social media that you can read, you can watch, and you can make up your mind to then decide what you want to do. Remember that investing is risky, and when it comes down to cryptocurrency is even more risky, so be careful. Financial Fox is proud to partner with HIVE Digital Technology, a public listed company focusing on building the green energy infrastructure for the AI revolution. HIVE was the first crypto miner to go public in Canada in 2017. They are also listed on Nasdaq and the Frankfurt Stock Exchange. They hodl, and they are a leader in efficient Bitcoin mining with the best hash rate realization in the industry. They are operational, powered by green energy, hydropower in Sweden and Canada, and geothermal in Ireland. HIVE was also the first crypto miner to buy GPUs, chips, and have an AI strategy. And that's very exciting considering the AI data center are such a high profitable business. Finally, and most importantly, HIVE care about shareholders. That's why their strategy is low dilution, low G&A, and focus on cash flow. If you don't know HIVE, check them out at hivedigitaltechnology.com and follow them on social media. Remember, AI is the future and Bitcoin is rising as a new asset class. Some analysts have a target price above $100,000 for 2024, but let's see. For now, we hodl, and don't forget to check out HIVE. More information in the description. Hi Dan, how are you?
Doing well, thanks for having me on.
Yeah, I'm really excited for this discussion. So you are a name in the crypto and Bitcoin community, so many obviously will know, but for who is new to the space and doesn't know, give us a 3-minute introduction.
Sure, so I've got two sides to me. One, I've got my personal brand, and the other, I have my career in crypto. So I've been in crypto since 2011, built my first product in 2013. The first product is called Zero Block. We got bought by blockchain.com, and I was the first product manager at blockchain.com in December 2013. So from there, worked at another crypto startup, worked at Uber headquarters on writer growth and growth marketing, so product and user acquisition, and then left there to do another crypto startup that got bought by Kraken. At Kraken, I built out the marketing team from 2 to 30, and I currently do fractional CMO work in conjunction with my fund. So In summary, my career is as a marketer and a marketing leader, and I currently have a fund called Bitcoin Defi Venture Fund out of Asymmetric, a Bitcoin venture and hedge fund in the crypto space. So that's my corporate career. Personal brand wise, I've got close to 1 million followers on social media because I explain different Bitcoin topics simplistically. Back in 2019, 2018, I wrote a series of articles explaining Bitcoin's proof of work, origin story. That story is called Planting Bitcoin, Bitcoin's origin story, and a few others that people found really easy to understand and really easy to read. Lately, over the last couple of years, I've been focusing more of my attention onto Bitcoin DeFi. So this is decentralized finance on top of Bitcoin. That would include like NFTs, lending and borrowing, yield farming, all those sort of activities that you would normally see on Solana and Ethereum, seeing those come back to Bitcoin. So that's currently what my passion's been about for the last couple of years. And after Ordinals came out, we definitely saw this narrative and this window shift. So that's the short summary of corporate career and personal brand.
Fantastic. When did you get into Bitcoin?
2011, and my buddy paid me back for a beer with something called a Cassatius coin, those physical gold coins that you see in all like the news articles. You peel that back to unveil the private key, and you'd be able to extract the Bitcoin. But essentially, that was my first Bitcoin back in 2011. Now, of course, I didn't immediately go buy everything I could. I was skeptical, like everyone is. And so, spent my time kind of learning and reading a little bit more about it, playing around with it. And then around 2012, 2013 is when I really started to, I would say, like really get involved.
Great. So what do you think is the promise that Bitcoin holds?
Bitcoin it has 3 value props. It is a money that isn't controlled by anyone else. So for governments cannot control it. They cannot print more of it. So has the best, most credible monetary policy in the world. It's also immutable, which means you can't censor it, so I can transmit it and send it to anyone else in the world, and it's very, very hard to seize. So seizing means like going and taking it. If you manage your private keys properly, your Bitcoin is virtually impossible to seize. So those are the 3 value props of Bitcoin, and those most resemble a digital gold, if you will. So digital gold being a store value asset where you can store wealth in this over time. You can, you can store it, and you have very, very high trust that the monetary policy was never going to change, that it's credible, and that it's really hard to go find it. Like if you bury your gold in the middle of a forest and only that gold's probably safe. Similar to your Bitcoin private key, if you manage that properly, your Bitcoin is safe. So yeah, it's a digital gold. And I think with DeFi, a lot of people go, well, doesn't that conflict with DeFi? Are those 2 separate things? And I don't think so. In DeFi, you want to use the most sound piece of collateral. You want to use the best money as collateral for these smart contracts possible, and Bitcoin has that. And people naturally owning Bitcoin want to do more things with it, lend, borrow, and do all sorts of stuff.
Yeah, that's great because Bitcoin is not just remaining basically an unproductive asset, but it can have much more utility. So going into DeFi, which is considered a future of finance, but we are still kind of like in an experimenting stage because really TradFi has not really implemented DeFi, mainly because of lack of regulation. But I think it's also about education as well, and there is a lot of experimentation going on. So now we have seen DeFi mainly flourishing on Ethereum because of the smart contract capabilities. When it comes to Bitcoin, which has got a different design that seems more restrictive, can you maybe expand on what you think are maybe the challenges and what is actually the opportunity that DeFi can leverage on using Bitcoin?
That's a good question. So when we look at, like a Solana and Ethereum, they typically have given up more decentralization to do more cool things. That's kind of like the TLDR. That's the summary of what's going on there. So Bitcoin has a highly restrictive Bitcoin L1, so L1 is the Bitcoin base layer, and it does that because it wants to preserve decentralization at a very, very high degree. What level of decentralization is appropriate? Still up to debate. However, I do like how the Bitcoin community has thought through things in a more, I would say, critical manner, because if nation states ever do attack crypto, you want to make sure it survives, and Bitcoin has your best chance of survival. So with Bitcoin, being much less expressive on Bitcoin base layer, it requires that expressivity to be expressed on layers above it, so like layer 2s. That would be an example, for example, we've got there's the whole old class of layer 2s where you have rootstock, stacks, liquid, and lightning. Then you've got kind of the new wave of built on Bitcoin, Meso, BitLayer. These are the kind of the new Bitcoin L2s that are coming out. Bitcoin L2s can have a token, not have a token. There's all sorts of different architecture and design considerations, but that's where this expressivity is pushed towards. There are pros and cons to this. Pros, it's more efficient and scales in a more efficient manner. Another pro is that you don't have compounding risk on layer one. I think a lot of the Ethereum community brush aside what I consider to be very material concerns around, if you do all this restaking, what happens if one of these blows up? Or, for example, make or die, like that is only, it's collateralized by centralized instruments. So what happens if like the U.S. government sees these centralized assets like USDC, USDT, or DAI, right? Like what if you had cascading smart contract failures? So, there's a lot of that expressivity, and what they call that is, you're able to build on more and more. You can build your smart contract on top of another smart contract on top of another one. That could lead to compounding risk, whereas Bitcoin has much more single dApps. So Bitcoin on layer 2 has all this expressivity, but that doesn't impact Bitcoin layer 1 that much. On Bitcoin layer 1, you do have some, I would say, like primitive smart contract capabilities with discrete log contracts. That's where like Liquidium and Atomic Finance, what they do is they allow you to do these DeFi activities using discrete log contracts. That's a smart contract in Bitcoin base layer. Of course, as transaction fees go up, it becomes pretty expensive over time. And then, of course, we have Ordinals. Ordinals are both NFTs and meme coins on Bitcoin layer 1. So those are really interesting because, these are interactive on Bitcoin layer 1. So when we look at the future of Bitcoin's smart contract capabilities, it's predominantly in layer 2, but there are interesting things that you can do in layer 1. Overall, Bitcoin can't do a lot of the cool things these other chains can do on layer 1. It does that to preserve decentralization, to be the best, most credible, sound money in the world. But we do believe that we can expand on that using layer 2s. Whatever native asset that you're using for the underlying protocol, that's the most important thing. Bitcoin is owned by more people than any other crypto asset. Bitcoin's market cap is bigger than everything else combined. So yeah, from a very basic first principles perspective, do you want to build a dApp, a decentralized app in an app store with the most users? Or do you want to build it on a smaller app store that is easier to use but has far less users? So Bitcoin DeFi inherently is drawn to the Bitcoin blockchain because it has the most number of users who'd want to use it. In terms of its unique capabilities, I don't think Bitcoin exactly has anything, in terms of smart contracting functionality. Like it's very much, I'd say, less advanced than some of these other L1s. That's fine. It doesn't need to be as sophisticated. There is a very nuanced conversation around the practicality of some of these things. So for example, NFTs on Bitcoin, I would argue, are a superior product relative to other chains because the graphic asset, the Bitcoin JPEG, that exists on the Bitcoin blockchain versus on Ethereum and other chains, they just point to like an IPFS file, or they just have a hash of the image. And so the market seems to value that the actual graphic asset exist on chain, and also it's very costly to inscribe that graphic onto the Bitcoin blockchain. So what that does is it reduces the number of just like totally spammy sort of NFT collections because it might cost the issuer a few $100,000 in transaction fees to inscribe it on the Bitcoin blockchain. So there's some costliness to it. Now, I don't believe that just labor value equals value for something, but it is a narrative and people seem to like it. So Bitcoin NFTs, I would argue, are more permanent, they're more expensive, and I think NFTs started on Bitcoin with Counterparty back in 2015. Ethereum popularized NFTs, and now it's coming back to Bitcoin. So Bitcoin NFTs and those collections have learned a lot from the mistakes of the Ethereum NFT ecosystem. So we might see some longer lasting, better constructed culture and memetics woven into these NFT collections that some of the Ethereum ones didn't really have that insight when they built their NFT collections.
So if we say on NFTs, some people are saying NFTs are dead, which I don't believe that is the case, because we probably should focus more on the use case that NFT actually can be valuable for enterprises and for different things. And then on the other side, I was reading some discussion about really Ordinals or maybe NFT on Bitcoin doesn't need to have an utility. What do you think is actually happening? Where do you think the community, the Bitcoin community, want to bring the future of NFTs? Do you think it should be an utility or not? And if it should be, or it is or there is?
Yeah, so I've never heard anyone ask that question around art. No one's like, what the fuck is a Picasso? What's the utility of Picasso? Like, said no one ever, right? So I don't think NFTs have to prove anything to anyone about having more utility than the image itself. Like, it's sort of inherent that that is the utility. If we want to like broaden our scope and think about the utility of crypto as an asset class, the utility is a casino. It's trying to be a better, more fun casino games that people want to play. To be clear, 99.9% of the space has no product market fit with anything resembling anything what we might call utility. The utility is speculation. It is building a better speculative casino. Now, a lot of people find that disheartening, but that is what it is. I mean, it's not a subjective statement, it's an objective one. You've never seen a space that has gone on for 12 years, deployed hundreds of billions of capital, yet how many times do you use a blockchain in your normal day life? Ever. Like your car, your grocery store, any accounts that you use online, none of it, right? Like there's never once been a sector in tech that has ever done that where it's been 12 years and hundreds of billions of dollars have been deployed. Like you didn't have anything other than speculation.
Sure, but you still build a community. You have a status that the NFT or the assets give you. So, and I think this is also what is happening in Ordinals. I feel that the community that has been built on Ordinals are much stronger than others.
Yeah, I mean, I believe speculative community is a fantastic use case. It's speculation, of course. I think if those NFTs were worth zero, I don't think anyone would be around. So like, it is a very interesting casino game mechanic of, look, art is the same thing. I'm not saying like real world art is this like totally different class. It's identical, right? Like it's a speculative, cultural, mimetic thing where, you know, I put up a Picasso on my wall and I'm like, look, see, I'm a cultured person. I understand the nuances of the art casino game. And then, you know, with that as well, it's like I can also provably burn $10 million to buy this. And so there's an exact same signaling and value game with NFTs. It's identical. It's just a different way of expressing it. It's a digital version versus a physical one. And so that is speculative utility, and that's fine. You know, that's not a bad word. Speculation is inherent to every asset class. And so with art, like people are fully aware that like modern, you know, like really nice, really expensive art, you know, as a signaling mechanism, a cultural one and a community one. And I think NFTs are a really fun expression of that.
Yeah, and if we move into BR20 and Runes, we're still in the space of speculation, maybe a bit more on steroid.
It's all speculation, but yeah. I mean, look, it's not a dirty word though. It's inherent to the human condition.
I don't think I agree. There is nothing bad. I mean, the AIM market on the the London stock market has been the same. You know, all the penny stocks, and we know everything.
Even mainstream stocks, those are still highly speculative.
Mainstream stock. That's actually good.
All traditional assets are speculative as well. When equities were first introduced, equity as an asset class didn't exist until about 500 years ago. So like equity itself is a somewhat new financial instrument. The oldest one is debt. When equity first came out, people were skeptical of it. You had like the tulip bubble and the South Seas bubble. The South Seas bubble was such a devastating equity speculative bubble that the Bank of England refused to grant new publicly traded company charters for 100 years. So like any asset class is highly speculative, and that's not a bad thing. But I do think like, you know, for example, like these crypto assets aren't tied to anything in the real world, so you know it's a little bit more frothy, I think, than the typical asset type.
So if we go back to DeFi on Bitcoin, we kind of address the point of scalability. I wanted you maybe to just spend a little bit more time on transaction fees and what what the innovation means for transaction fees, and also on interoperability as well, which is kind of important if we talk about where we are heading into this digital economy as well.
Yeah, so with transaction fees, you know, the amount of block space on the Bitcoin blockchain is scarce. And so when people want to get their transaction included in a Bitcoin block, so Bitcoin block is approximately every 10 minutes, there's a scarce parcel of transaction fee space, and you pay based on the amount of bytes or data you're trying to get into that Bitcoin block. So what's important to note with Bitcoin block space is that since it's finite and demand increases, that transaction fees naturally will rise as well. So this is also the scaling considerations that Ethereum thought through, where the Ethereum and the Bitcoin base layer L1 transaction fees would increase over time, so they become higher and higher because of that fixed amount of space and an increased amount of demand. And then the transactions that are lower value or need to have more expressivity, like for Bitcoin, the Bitcoin blockchain, those transaction move to the second layer. So that scales in layers where L2 should be very low transaction fees, and L1 is the higher transaction fee layer. Now, people are like, well, why is that a good thing or bad thing? Bitcoin's supply issuance of the number of newly minted Bitcoins declines over time. That's what we call the halvings every 4 years. The amount of newly issued Bitcoin on Bitcoin's production schedule drops in half, and so the supply curve kind of looks like this. That means that only 21 million Bitcoin will exist, and there's around 19 million Bitcoins a day, and that production curve does this over time in terms of how many new Bitcoins are released. As Bitcoin's subsidy, or what we call the newly minted Bitcoins, declines, there's a hope that the transaction fees will offset the decline in the subsidy because Bitcoin miners are compensated with both the subsidy and the transaction fees, and that's the game theory that protects Bitcoin, is that reward, that block reward that miners receive for doing all the mining activity. That block reward is comprised of those two values, and so if transaction fees don't compensate the drops in subsidy over time, there's a worry that there might not be enough security budget to protect the Bitcoin blockchain. What's really cool with seeing ordinals and the rise of Bitcoin L2s is I think that question has been answered pretty comprehensively here. We have seen transaction fees rise, and we have seen increased demand for Bitcoin block space for all types of financial transactions. So not just paying for a coffee, which I don't think is a good use of Bitcoin currently today, especially on Bitcoin base layer. It's more of an expressivity of highly economically dense transactions, like an NFT transaction that's worth like $20,000. So these bidders for block space, the more valuable the assets that they're moving on that, whether that be Bitcoin natively or another asset, they're willing to pay a higher transaction fee, and that ensures the security of Bitcoin long term.
How do we overcome the constraint of interoperability between Bitcoin and the other chain in DeFi?
Sure, there's a million different bridge designs you can do. I think a lot of people have migrated more to the like intent-based interoperability, or essentially like atomic swaps, or ability where you don't have to put money into a honeypot and then they create a synthetic version. More of the modern bridging techniques are more of finding counterparties on each chain that want to transact. So more of liquidity pools in a way. So I think that that's kind of the future of interoperability, where we look at, instead of having this honeypot model, you have more of people are posting limit orders on each chain, and those get atomically swapped. So things like that I think are really interesting. So yeah, I think we're pretty early, I think, in this journey on interop on Bitcoin, because a lot of the Bitcoin L2 tech hadn't been built out. But I think we can look to Ethereum and other chains and look at how they've approached their interoperability. For example, on Ethereum, you have a cross and a bunch of other bridges. I think that these are really interesting in terms of new bridge designs that we could take those lessons and bring it over to Bitcoin.
Yeah, and I guess also the challenge of user experience is going to improve as these kind of solutions get developed. So as a GP of a VC fund that invests in this space, tell me what you are excited about, what you are specifically focused on.
Yeah, Bitcoin DeFi is the largest opportunity that has ever existed in crypto. Bitcoin is worth more than everything else combined. It's not that Bitcoin's the number one chain. Bitcoin's the number one chain, and it is bigger than everything else summed up together. So when we look at where would you want to go build dApps, or where will the really huge potential ecosystem plays, Bitcoin DeFi is the largest opportunity that has ever existed. A lot of people on the Bitcoin maximalist side and the Ethereum maximalist side thought that Bitcoin DeFi was impossible. That's not true. If you look today, there is sometimes more trading volume in Bitcoin NFTs than Ethereum, and that's after just 1 year with limited tooling, limited knowledge, and limited funding. So we're about to see an explosion of DeFi activity happen on Bitcoin, and I've mentioned this 2 to 3 years ago that we would see this eventually, and now we're seeing it come to fruition. So this is an incredibly exciting moment, a very validating moment that Bitcoin DeFi is a real thing. NFTs, layer 2s, all the different smart contract functionality that we want on layer 2s. This is what is coming to Bitcoin, and there's a tidal wave of VC money that has come into these startups, and a few of them we funded ourselves. Like I mentioned, Mezzo, built on Bitcoin, and BitLayer. These are Bitcoin L2s that we invested in. Each one is a different design consideration, and also what we look for in founders are really sharp founders who are going to be able to go out there and build out an ecosystem, build out liquidity, build out TVL. So I think the Bitcoin L2 arms race is about to begin. We saw this happen over on Ethereum last cycle, and I think that's what we're going to see this cycle on Bitcoin, is a land grab or a race for these Bitcoin L2s to go capture a lot of this, I would say, new enthusiasm for DeFi on top of Bitcoin. So yeah, as a fund, we're one of the only pure play Bitcoin DeFi funds in the space. We're investing exclusively in that category and nothing else. There are other really big funds that have come into this category. For example, Pantera led the Mezzo round that we participated in as well. So Pantera is one of the oldest funds in this space, and so we're seeing folks like that come into the crypto ecosystem. Same with like multi-coin. We're seeing a ton of different VCs come into the space that are the classic crypto VCs, the big ones, which is very validating that they're also seeing what we're seeing. But we're the only one that's pure play. So in terms of our investors, they just have exposure to Bitcoin DeFi. They don't have exposure to any other type of crypto asset.
Definitely Bitcoin has been the best performing assets in this cycle. Do you have any prediction for 2024 on Bitcoin price that you want to share with us?
Well, it's always a fun question, but when we look at Bitcoin's previous cycles, it's never broken the all-time high before the halving. So this is very atypical. We don't normally see that happen. I do think that it would be weird if Bitcoin wasn't above 100,000 by the end of the year. That seems very doable and very plausible. It feels like between 100 and 150,000 by the end of the year is like a good target. I think that is still probably conservative. If we look at the Bitcoin ETF, the amount of money that can go in and one-click buy Bitcoin and add it to their portfolio, that's pretty wild to have that sort of access. No other crypto asset has tens of trillions of dollars that can go buy it instantly in their brokerage account. So I think that this cycle Bitcoin might surprise us. So I don't think we'll see that declining return. A lot of people look at the previous cycles and kind of see this declining return. I think we see Bitcoin surge back and do something that probably surprises us. So, 150K is not my top call. That's just a call by the end of the year.
Listen, I look forward to it. Dan, thank you so much for coming on the show.
Thanks for having me.